Hey folks, uh, good morning to you and welcome to yet another session from Go for Stocks where we discuss Nifty outlook, Nifty and market outlook for next week. We also look into what the markets have done over the previous week. But before we start the session today, just want to highlight some key points about Go for Stocks. Where we are in our journey. So we've completed 4 months in our journey to enable retail investors generate nifty beating returns. So in continuation of our quest, as you know, you might be knowing that we have various segments like stock of the month, momentumizers, and our long-term stock basket. So what we have found is that the pharma sector has been outperforming the Nifty for some time, and that is why in our stock of the month we have recommended a stock from this pharma basket. So yeah, if you want to know which stock it is, you definitely would have to subscribe to our stock of the month segment. Our long-term basket continues to outperform the Nifty during the same period. Like over the last 4 months, while Nifty has generated about 12% returns, our long-term stock basket has handsomely beaten the Nifty by generating 25% plus returns. And the other thing is, last week we have started a 15-day free trial period for our short-term recommendations, which is the Momentumizer stocks. So basically the purpose is to enable would-be subscribers to get a first-hand experience before getting into a long-term commitment. Like they would know what kinds of stocks we recommend, what has been our past performance, what has been what has been the maximum drawdowns that we have recommended on our stock so far. If you, I can offhand tell you that we do not take more than 7 to 10% losses in any of our recommendations. So if any stock has lost by more than 10%, it is like we immediately close our positions on that particular stock and advise our subscribers to exit as well. And you might be knowing from our previous videos and on Momentumizer's performances that stocks have given returns about 60%. Some stocks have given returns of as high as 60%. Some have given returns of 40% and 40% plus as well. There are quite a few stocks which have given returns 15% or more. Quite a few, like 60%, I would say, have given returns of 15% or more. So what you need to do to enable your trial period is you just need to send an email to sales@goforstocks.com to activate your trial period. And so also what we have done is on Tuesday we have created a video where we shared some of our secrets as to how we pick stocks in our Momentumizers basket, giving a recent example of an open stock currently in our basket, which is called Reflex. So that stock has at that point had generated 60% plus returns, but then over the last few days, corrections had come in over the across the market, and now it's close to 40%, 50%, I think, returns, which the stock is still up by. So these are the announcements that I wanted to make before I actually go into my chart reading and chart analysis for next week. So we'll start with the Nifty, of course. And as you can see, like if this is the daily chart of Nifty started the week, you can say in a range bound fashion, like that is what we had anticipated because of the, um, uh, uh, I mean, because of the options positions uh, at that point of time. But then on Wednesday night or I think Tuesday night, India time, uh, Fitch came up with its downgrade of the US debt market. So that caused some panic in the US markets, which of course translated down into all the global markets. And we also were not left behind. So we also corrected uh, based on the Fitch downgrade, and we corrected and by quite a lot. I mean, from the top, we corrected about 500 points. For top means top for the week. That is, we made a top at around close to 800, 19,800. And from there, we corrected 500 points in 3 days. But then we found support at 19,300 levels, which is where, as you can see, the daily pivot is for the month of August. So this is the daily pivot at around 19,329. It went slightly below that, but then of course it, on the day itself, it also ended above that. And then on Friday, we had a good session as well, like where most of the broader indices also performed pretty good, along with the Nifty as well. So so what do we see going forward? Going forward, there's one thing which happened though. We ended the week below the 19,600 levels, which is where the this is the pivot here, 19,600, approximately 19,590 odd is where that weekly pivot resistance is. So we ended the week below that pivot resistance, and so going into next week, we might find resistance at this level as well. And what corroborates that, strengthens that, is the options data. So if we see the options data here, you can see that 19,600 levels is where the maximum call open interest is. And as you can see on Friday also, even though the markets had gone up, maximum open interest got added at this 19,600 levels only. And on the put side, we can see that 19,400 levels is where the maximum put open interest is, but we saw maximum additions in the 19,500 levels. So so this may be because if you can see 19,500 levels, the number of calls and the number of puts are more or less the same. So this is the kind of the what should I say, the max pain area for this week. So that's the so 200 points, not 200, it's about 180 points either way, is probably the zone where Nifty is going to trade in, at least till the RBI policy on the 10th. 10th is also happens to be the weekly expiry, so that would be interesting. So till that time, we expect 19,350 to 19,650 would be possibly the range where Nifty might trade, at least till Thursday, and then depending on what the governor says or what his outlook is, we might see a trending move either up or down. What a good thing which has happened last week is that we got an upgrade from Morgan Stanley, and I think one more brokerage and S&P, I guess. Yes, these are the two places from where we got an upgrade. So that's a good thing for Indian markets, and it's a good thing because Morgan Stanley has downgraded China and upgraded India. So, which basically means that a lot of funds from these places, like China is a major, attract huge market for fund inflows. So if China gets downgraded, it's expected that some funds will get out of China. And other than China, they've also downgraded Australia and a couple of other Asian countries. So funds from these countries are expected to flow to India over a period of time. So, so the bullishness over a long medium term perspective should continue, but we might have some jitters here, sorry, here and there. And so the immediate trigger, of course, remains the RBI policy next week on Thursday, and we'll see after that what happens. So moving on to from Nifty to Bank Nifty. Bank Nifty is in a range, like you can see. This is a weekly chart of Bank Nifty, and for the last 6 weeks, Bank Nifty has been trading in this 43,800 to 46,400 range. So, so it's expected that the RBI policy, once the RBI policy decision is announced, this range might break. Which side we'll have to see. So till that time, this is the range for Bank Nifty. So 43,800 on the downside to 46,400, 450, 500 on the upside is where the Bank Nifty range is. So within that, of course, you can, if you want to have a trade in Bank Nifty, short straddles and strangles are the way to go ahead. And yeah, and of course, if it's closer to the one of the levels, short positions can be taken with very good risk reward ratios, with very small with very little amount of risks as well. Moving on to IT. IT remains, of course, this band or this rectangular box. We've seen this rectangular box since April 2022. And this is a weekly chart of the Nifty IT. But good point is, in spite of the overall market falling, this is the one index which has, rebounded strongly, and it has gained about 3% during the week. So, which is a good sign. And now it might again, it took support here at its confluence of moving averages. And now it's trying, I mean, next week it might try to see. Bank Nifty might be range bound. So if Nifty were to move ahead, IT would have to do a lot of heavy lifting. So yeah, so if IT might again try to make a move towards this 31,500 levels, which is 1,000 point. Sorry again. It gained actually 1,000 points this week. And yeah, it's possible that it can make another 1,000 points next week, and we'll see after that where it goes. So that's about IT. We discussed Bank Nifty, but let's see what HDFC Bank has in store. HDFC Bank, again, it's this is also the weekly chart of HDFC Bank, and like the Bank Nifty, it's been in a tight range for a very long time, from 1580 odd to 1720 odd. So this range needs to break before any bullish or bearish views can be taken on HDFC Bank. Currently, it's in consolidation, is all we can say. So after IT, Bank Nifty, HDFC Bank, let's take a look at Reliance, and it's more or less the same thing. That's also in consolidation, and 2720, 2750 is the level it needs to break, above which Reliance might see a decent run up. But whether that will happen, I'm not sure, because I don't see major triggers in Reliance at this point of time. But Reliance definitely needs to hold on to 2400 levels. above 2400 levels. It would not do, if it remains above 2400 levels, at least it will not harm the Nifty, so to say. But if it falls, then if Reliance becomes bearish, then Nifty, one of its major legs, um, would be faltering, and it would not be able to run on all cylinders. That is. So yeah, Reliance definitely has the power to pull Nifty down. So moving on to the broader indices, the mid cap index, and as you can see, this is also the weekly chart of the Nifty mid cap, and yeah, so we are very close to the weekly resistance. So we'll have to see now whether whether the mid cap index actually makes its way above these levels, which is around 37,650 odd. So if it makes, yeah, if it 37,884, 884 is the high it made during the week, but then it faltered and came below this 37,000, sorry, 37,650 odd levels, or yeah, and closed at around 37,630. So we'll have to see. I mean, above 37,900 levels, of course, the bullishness in the mid cap index will continue, and of course, then this resistance will become a support. But we'll have to see what happens next week. Let's see if we can look into the daily charts. The daily charts are good, and yeah, so that the drop that you see in the mid cap index was mainly because of the when the entire markets were falling, and over the last 2 days it has recovered quite a bit. So yeah, expect next week that if Nifty remains in a consolidation mode, this mid cap index also to break above 37,900 levels and move towards 38,400 levels. That is definitely possible, but provided Nifty remains in consolidation, or mainly Nifty doesn't get bearish, that is, or stays above 19,300. That is the sacrosanct levels for Nifty right now. Small cap index is in an uptrend, but there's a doji formation on the weekly charts. Basically, yeah, so doji is like when the open and close for the candle is almost at the same level. As you can see, the body is very thin with long wicks on either side, and it signifies that the market is undecisive. It doesn't know whether to go up or fall. So yeah, I would be keeping a close watch next week. Any move or any any fall below this week's low, which is 11,137 odd, I would stick to my stop losses for my individual stops and take exits. So mainly, so if we take exit from our trading positions, mainly to preserve capital, because that's our only raw material. So yeah, so I think we've talked about most of the indices. We've talked about HDFC Bank, Reliance. We've started including HDFC Bank because currently it's the highest individual stock, which has the highest weightage as an individual stock in the Nifty basket. So that's why we have to look at HDFC Bank as well, in addition to Reliance, that is. So so that's all from me today, folks. Have a good day, have a good weekend, and happy trading, investing, whatever you are good at, whatever you are doing. And bye for now.